What's happening in crypto? BlackRock is making huge moves, inflation is still raging, and a teen hacker is in hot water. Plus, is Bitcoin about to pump? We're breaking it all down right now. Don't miss a second, hit that subscribe button and ring the bell. First up, is Bitcoin still the ultimate inflation hedge? With the Fed playing the long game and crypto payroll exploding, especially in Asia, we're diving deep into whether your paycheck can survive the current economic storm. Stay tuned. Then, we unpack BlackRock's seismic shift from Ethereum to Bitcoin. What does this massive reallocation mean for crypto payroll and treasury management? We've got the institutional insight you need to know, coming right up. And you won't believe this. Bitcoin dips below $110,000, but is the market actually safe? Plus, a teen suspect in the Vegas casino hacks is out on bail, allegedly holding millions in Bitcoin. We've got all the details and what it means for you. Stick around and make sure you're subscribed. Bitcoin's inflation hedge status under fire. Is Bitcoin still your go-to digital gold against soaring inflation? The answer is more complex than you think, especially with the Federal Reserve's cautious stance and the explosive growth of crypto payroll solutions gaining traction, particularly among fintech startups in Asia. We're dissecting Bitcoin's evolving role, the surge in paying employees with digital assets, and what this means for businesses navigating a turbulent economy. Bitcoin has long been championed as a hedge against inflation due to its limited 21 million coin supply, theoretically protecting it from the debasement of fiat currencies. However, its volatile price swings can undermine its effectiveness as a short-term shield. While it may serve better as a long-term store of value, investors are increasingly diversifying to mitigate risks. This inflationary pressure is a major catalyst for crypto payroll adoption, with employees seeking to preserve their earnings, value through stablecoins or other cryptocurrencies, especially in economies with depreciating fiat currencies. These solutions offer cost-effectiveness, speed, and a competitive edge in talent acquisition for startups. The Federal Reserve's deliberate delay in easing monetary policy, signaling slower interest rate cuts, has significant implications. This means less market liquidity, potentially leading to more gradual crypto price rallies and increased market volatility. For businesses considering crypto payroll, this necessitates robust financial planning, utilization of stablecoins, and a keen awareness of evolving regulatory landscapes like MiCA. Despite these challenges, the trend towards wider acceptance of crypto payroll is undeniable, with increasing integration into traditional financial structures and a growing employee-centric focus. The future of salaries might be intrinsically linked to cryptocurrencies, presenting both opportunities and hurdles for businesses and their workforce. Don't go anywhere, because the market might be showing a surprising signal of strength despite recent drops. And coming up, we break down the major institutional shift that could redefine crypto treasury management. BlackRock pivots, Bitcoin surges, Ethereum cools. BlackRock's bold move away from Ethereum and towards Bitcoin is sending shockwaves through the crypto world, potentially reshaping crypto payroll and treasury management. We're exploring what this institutional shift means for innovation, regulation, and your digital assets. BlackRock's decision to reallocate over $440 million from Ethereum to Bitcoin signifies a significant shift in institutional confidence. While this could temper innovation within the Ethereum ecosystem, it bolsters Bitcoin's position as a preferred store of value, especially with its regulatory backing and robust security. The SEC's streamlining of Bitcoin ETF approvals, despite ongoing regulatory complexities like market volatility and cross-jurisdictional compliance, provides a clearer path for institutional adoption. For small and medium-sized enterprises in Europe, navigating crypto treasury management presents challenges such as Bitcoin's inherent market volatility and the evolving regulatory landscape under frameworks like MiCA, which add compliance costs and operational complexity. Security against hacking and fraud, alongside liquidity and counterparty risks, are also paramount concerns. A balanced treasury model, diversification, and staying updated on regulations are key to mitigating these risks. Meanwhile, fintech startups in Asia stand to benefit. BlackRock's increased investment in Bitcoin could enhance crypto payroll solutions, making them more attractive to talent, especially in regions with unstable fiat currencies. Offering crypto payroll can boost transparency and efficiency through blockchain technology, aligning with decentralized principles and providing startups a competitive edge. BlackRock's strategic pivot underscores the dynamic evolution of the cryptocurrency market. Businesses must remain agile and informed, adapting to regulatory challenges and market volatility to thrive in the complex world of crypto treasury management and payroll. Bitcoin just broke a key support level, but a hidden signal suggests the market might be stronger than it looks. And later, a teen hacker allegedly holding millions in Bitcoin from a major casino heist is out on bail. We've got the shocking details. Bitcoin dips below $110K. Is the bull market safe? Bitcoin investors are reeling from a sharp 5% price drop, pushing BTC below $110,000. Is this a mere correction or the start of a bear market? We're diving into a crucial on-chain analysis from Swissblock that suggests the bullish structure might still be intact. Despite recent losses, Swissblock's risk-off signal indicates Bitcoin has not yet entered a high-risk regime, a key indicator of a trend change. This suggests the market remains in a low-risk environment, with expectations of recovery and price bottoming once momentum returns. Analysts predict a potential new upward leg driven by institutional demand, especially as ETF inflows could see a resurgence. This renewed interest is critical as long-term holders are reportedly reducing their positions, a behavior often seen at the end of a market cycle. However, the absence of a high-risk signal offers an opportunity for institutions to absorb the increasing supply. Adding to the bullish outlook, crypto analyst Lark Davis points to September's negative performance as a historical precursor to significant Q4 price surges. Past data shows that after notable September declines, Bitcoin has experienced substantial rallies in the subsequent quarter. This pattern, often dubbed Rictember, suggests that investors might be positioning for another major price leap. At press time, Bitcoin trades around $109,401, showing a slight daily gain, but trading volume remains subdued. The market is watching closely to see if institutional demand will indeed step in to reignite the bullish momentum. We've covered the market's pulse, but what about the wild west of crypto crime? And next, a teen suspect in a massive casino hack is out on bail, allegedly hoarding millions in Bitcoin. You won't want to miss this story. Teen hacker out on bail with millions in Bitcoin. A 17-year-old accused of playing a key role in the massive cyberattack on Las Vegas casinos is out on bail, while prosecutors claim he's still hiding $1.8 million in Bitcoin. We're breaking down this shocking case and what it means for the future of digital asset crime. The suspect is alleged to have contributed to the devastating 2023 cyberattack against MGM Resorts International and Caesars Entertainment, attributed to the hacking collective Scattered Spider. This sophisticated network intrusion, utilizing Black Hat ransomware, cost the casinos over $100 million and resulted in a $15 million ransom payment to Caesars. The teen surrendered to authorities in Nevada shortly after other alleged Scattered Spider members were arrested in the UK. Cybersecurity experts expressed surprise at the arrest of a local resident involved in such a large-scale attack. Prosecutors accused the teen of secretly holding $1.8 million in Bitcoin stolen from the heist, which has yet to be recovered. The Clark County District Attorney's Office is pursuing efforts to try the teen as an adult, despite him being only 15 at the time of the attacks, seeking harsher sentencing and potential prison time. However, a family court judge ruled in favor of his defense, releasing him to his parents' custody under strict conditions, including restricted internet and cell phone usage and limitations on leaving Clark County. The charges currently include extortion and conspiracy to commit extortion. The outcome of the adult trial attempt could set a significant precedent for how juvenile involvement in major cybercrimes involving cryptocurrencies is handled. The case highlights the ongoing challenges in tracing and recovering illicit digital assets and prosecuting young offenders involved in sophisticated cyberattacks. That's a wild story, but we're not done yet. We've got a lightning round recap of all today's top stories coming up. And stick around for our full call to action. You won't want to miss how to stay ahead of the curve. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin's complex relationship with inflation, BlackRock's massive pivot to Bitcoin impacting institutional crypto, a potential bullish signal despite price drops, and a shocking teen hacker case. Remember to like this video, subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell so you never miss an update, and follow us on all social platforms to join the conversation. We'll see you in the next one.